Good morning, I'm Robert Tan. Join us as we follow the money from the financial choices that shape your daily life to the bigger forces driving the economy. The headlines. Another fuel price hike is expected next week. Prices up, growth down, peso down. Economist Jonathan Ravelas connects the dots and what the BSP might do from here. Plus, May 27, Wednesday, has been declared a regular holiday in observance of Eid al-Adha. Motorists may have to brace for another fuel price hike next week. In an interview, the Department of Energy said diesel, gasoline, and kerosene could all go up by up to 1.5 pesos per liter. But the DOE noted that the projected diesel increase might still be trimmed by 50 centavos. The DOE's projections are based on 4-day trading under the mean of Platts Singapore. Mark your calendars, May 27, Wednesday, has been declared a regular holiday in observance of Eid al-Adha. This makes May 27 a non-working day for most schools and workplaces nationwide. Eid al-Adha, also known as the Feast of Sacrifice, is observed by Muslims around the world. Coming up, thinking about borrowing or investing soon, the central bank is making a decision next month that could impact your big money moves. We get the fearless forecast of economist Jonathan Ravelas next. Keep following the money. Welcome back to Follow the Money. The peso is hitting record lows, inflation is up, and the stock market is stuck. But the headlines are saying impeachment, Senate drama, budget controversies, more political noise than economic clarity. For years, the Philippines sold a storied growth. Now many say we're in defense mode. And today we follow the money with Jonathan Ravelas, Senior Advisor at Reyes Tacandong Co. Good morning, Jonathan, and welcome to Follow the Money.
Good morning, Robert. Good morning to your listeners.
Jonathan, you said the Philippines is no longer in growth mode. We're in defense mode. Now, what does that mean for ordinary Filipinos?
Okay, given the trifecta of deficits. So one is you have a trade deficit that is driven by the higher oil price, which turns into the current account deficit, and a fiscal deficit because government will have to do the heavy lifting. So the key idea is to survive rather than to talk about growth. And this is the same for businesses. The key factor to this is really be able to survive 12 to 24 months given the set of current conditions. So that's what I think this period of uncertainty will last 12 to 24 months. So for the ordinary Filipino, this is turbulence. This is eventually belt tightening. So there is a Filipino saying, kung maikli ang kumot, matutong mamuluktot. So this is, I think, what we should be able to do right now.
Now, we see inflation is at 7.2%, the peso is at record lows, and the PSEI is kind of stuck. Now, are these separate problems or one crisis showing up in different ways?
Well, basically, this is one system that eventually trickled down. So this is eventually the effect of what you call the domino effect of oil. And this is eventually the challenge with the higher oil price, which now filters to the Philippines in terms of three things: transport, electricity, and eventually food. This really hits us with inflation. So basically a 60% imported inflation, while the transmission to the sectors accounts for around 40%. So this is, shall I say, part of the domino, and the end effect is eventually governance. Government needs to move faster to be able to try to at least contain the impact of inflation trickling down to the economy.
Now, Jonathan, as we go through the crisis that we've been experiencing in the past months, and now we see politics come into play and gaining headlines as well. Now, political noise has economic consequences, from impeachment fights and Senate chaos to unfinished flood control projects and corruption allegations where nobody seems to get jailed. Now, what kind of message does that send to investors, and how much is all this uncertainty actually costing the economy and the people?
Well, it's very difficult to probably try to quantify the whole impact, because we've already seen over the impact of over $1 trillion in corruption. Now, I think the key idea to probably try to rationalize this based on the data of a very conservative around 130 billion to around 330 billion that was lost to floodgate in the last 3 years. If eventually we were to use that to insulate the economy, then it would have actually lowered, or we could have kept gasoline prices lower by 15% for at least 5 months. So this is eventually one way of trying to look at the impact of that corruption. We could have at least sort of lessened, or at least prepared the people for the impact of this crisis at this point in time. So again, the key factor really is speed trumps perfection in terms of action. So this is eventually the challenge, where government wants to be able to still turn out growth amid this situation. If you recall, this is like the pandemic. The only difference is that we were all cooped up in our houses.
Yes.
So the challenge now is to be able to come up with COVID-like recipes to be able to do that. We've already seen the BSP highlighting waivering of penalties, extension for loans. So these are eventually those type of monetary policies, or shall I say tools, to be able to help businesses survive. The other thing is, just like in COVID, there was bayanihan, and there was the extension of the net operating losses from 3 to 5 years. So these are steps that, because of this political noise that we're seeing, our legislature are so focused on the impeachment and other things that they're forgetting to do their job to legislate this type of measures so that our economy can grow.
From your observation, what is lacking in terms of actions being provided by the government, and also the communication between the government and the business community in terms of what should they do next? Because some would say monetary policies and fiscal policies can only do so much.
Oh, yes, definitely. I think at this point in time, the government has already started their the subsidies and eventually the support to marginalized sectors. That's part of it. But we need to be able to look at the crisis way beyond. A good example is eventually the transport sector, because this is one of the most vulnerable. We had the project of trying to modernize our jeeps by providing the e-jeeps. Why not accelerate that so that we don't need to give subsidies for gasoline? So government has to look at long-term solutions rather than band-aid solutions for the current crisis. And in the Philippines, this is not something new. In the 70s, we had an energy resilient plan, and eventually the end of that was the firing up the Bataan nuclear power plant. But we didn't do anything. Right now, this is an opportunity for the Philippines to upgrade our energy resilience strategy. Because in the pandemic, we were able to change our financial capability by moving to digital 2.0. Digital 1.0 was the ATM. Digital 2.0 was cashless. And we've seen how that eventually helped businesses become more efficient in terms of payment. Now, this situation is really pushing us to do an energy resilience plan again.
But some would argue it would take a long time in terms of going into renewables, people buying EVs, plus infrastructure is not that set yet here in the Philippines. People are looking at something more, a quicker, short-term and mid-term quick fix.
You see, that's the problem. Our horizon is basically a short-term period. And for most of our legislature, it's either 3 years or eventually 6 years. What we need to legislate as a country is to look beyond. Just like in the 1990s, investors were very short-term. They were looking at just 3 to a year. Right now, people are looking at probably 5 to 10 years, and people could not see what's likely in the next 10 years because most of the plans are short-term fixes rather than long-term moves. Because if we follow the energy resilience plan of the Philippines, and if people were to read it, we are actually compliant because we have geothermal, we have hydro.
Yes.
What
But
we need to be able to
Can't that go hand in hand? Do short-term, mid-term, but of course, not taking away what needs to be done on the long term.
Well, I think at the moment, we need to be able to create our plan on power so that we are not, most of our power plants are in areas that are prone to typhoons.
Yes.
We need to think like our power system is like having a 10,000 mAh power bank. What we need to be able to do is to try to keep it smaller but scattered all over the country so that we'll have that type of power. So we need to come up with a plan. Are we going to go for the same traditional or are we going to go for a mixture? That's what we need to look at so that we're able to do short-term plans and medium-term plans. The problem is it's like what we're doing right now is we are faced in a buffet and we don't know what we want to eat. What we need to be able to do is to focus on what is important. What is important is energy resiliency because that depends on our medium-term plan of achieving agriculture, tourism, and manufacturing. Otherwise, that's not going to happen. Second, we need to think about food. We need to ensure food security. Otherwise, it's so difficult for our younger children to study because they're malnourished, they're stunting. How can they become the future when they can't understand? When their biggest problem is BLD, breakfast, lunch, dinner.
True. Now, Jonathan, let's look at the exchange rate. The peso broke past 61 to the dollar. Economists say a weak peso do help exports, but newer studies say the gains are quite limited. So who's really benefiting from the weak peso today, and who's getting hurt the most?
Well, basically, I guess definitely it's the OFW remittances and the exporters. Well, one thing that, and that's the reason why we need to create our plan as a country, whether it's energy, it's food, it's transport, because this depends on the potential factors of a weaker peso. A weaker peso focuses on tourism and our exports. But if our power is too expensive and the input costs are also widening, it defeats the purpose. But if we were to have better infrastructure, particularly for airports, lower power, then definitely we can attract potential foreign direct investments, taking advantage of our geopolitical position in the region being, it's less than 3 hours away from other ASEAN countries.
Again,
And
those
this is
are
actually
long-term
good.
projects that need to be revisited. But you, Jonathan, you also warned the PSEI could revisit the 4,000 levels. Now, what would need to go wrong for that to happen, and what needs to be done today to stop that from happening?
Oh, well, basically, I guess first is really do inflation containment. So right now with the uncertainty of oil prices, and you see this when people talk about or people hear that the U.S.-Iran peace talks are doing well, we see the market rising up, the peso appreciating. But the reality is the people are betting on hope. What we need to be able to do is to ensure that we are resilient. So, but we are all thinking that, oh, hopefully these things will be done in 3 to 9 months. What we need to be able to do is to really do SRP, survive 12 to 24 months, plan for the new environment. And even though there's a peace talks, I don't think oil prices will probably come down in the next 6 to 12 months. The risks are still over 150 to 175.
So still a lot of
the
hurdles
reality is we
to
need-
pass, yes.
So we really have to prepare for it. You know, the bad part is that for most of the companies in the Philippines, we're always optimistic, but we're not looking at the realities of our situation. So you need to plan for the worst and hope for the best.
Now, you were mentioning a while ago also monetary policies and fiscal policies that need to be done. Now, the BSP decides on rates again on June 18. What's your fearless forecast? Is it a hike, is it a hold, or a cut? And what does getting it right this time or wrong look like when that happens?
Well, basically, I think the BSP is on the right path. I think it's just a question of, again, the BSP is at the crossroads, mainly because they know that we need to see growth closer to probably 4 to 5%. But the challenge, of course, is inflation containment, which they've already done the 25 basis points. So most likely, they're just waiting for the next sprint of inflation for May, which could probably still be above 7%. And that could probably make them hike, probably between 50 to 75 basis points, and probably by end of the year looking at because it's inflation containment. It does two things. First, it will try, you have to understand that raising monetary policy is not meant to slow down the economy. It's actually meant to affect you and me. It affects our choices. Are you going to save or not? Okay. One of the other things that is already rising in our inflation rate is the cost of rice, which is in April went up by 13%. This is the second straight month that it already rose. So my worry is that if we don't try to fix this, then we can also see the peso, which is closer to 62, and probably a kilo of rice at 62 as well.
Now, the Philippines is ASEAN chair this year, yet barely anyone really talks about it. Is this still an opportunity right now to attract capital, or just symbolic at this point? What can we do moving forward?
Well, basically, I think at this point in time, we need to be able to look into the Philippines as still an opportunity for manufacturing. We need to look at it in trying to sell our position that, we are a good partner for investments. I think one of the things that we need to focus on is that having a reflection of the 1997 financial crisis. 50% of ASEAN exports is to itself. If we're able to do inter-Asian trade, we can weather this present situation by strengthening ourselves and keeping trade within ASEAN.
Now, you've said we're not fully yet in stagflation right now, but we're maybe close. But what's one indicator that tells us we've crossed that line, and what would prevent that from happening? Besides the monetary policies, fiscal policies, what else needs to be done here to prevent that from happening?
Well, basically, one of the most critical ones is basically if we start having negative growth, which at the moment, our recent first quarter is around 2.8%.
Yes.
So, yes, hopefully, given the set of the utilization of government spending has slowly increased or is slowly improving, then that could hopefully halt the slowdown in growth. So hopefully we get to see that in the second half of the year. Sad to say that most likely we will see the effect either towards the end of the second quarter or early third quarter. So my second quarter is probably between 2.5 to 2.8% GDP growth.
And going back, you've also mentioned that right now there's too much political noise in terms of what's happening in politics, in the Senate, the impeachment. What's one thing they should focus on right now?
The first is eventually coming up with a very similar bayanihan to be able to help businesses survive this current conflict. So these types of support, like extension of net operating losses, and probably provide more support for the SMEs. So once we're able to do that, at least that could help cushion, and at least it brings the perception for our businessmen that we can now concentrate on trying to survive, because there are certain government supports that they've already provided. Right now, there's actually none.
Now, Jonathan, before we let you go, we have some quick rapid-fire questions. Let's start by this. Peso by year-end, stronger or weaker?
Weaker.
PSEI in 12 months, above 6,500 or below?
Below.
Biggest threat right now, inflation, politics, or global recession?
Well, global recession, but basically it's more of oil.
Now, one word for the Philippine economy in 2026?
Fragile.
And finally, Jonathan, you've spent decades reading markets, forecasting currencies, and navigating crises. So in the Philippines today, with all the uncertainty we're seeing, how and where do you follow the money?
Well, one, I look at oil prices. The second, the 10-year U.S. Treasuries, and eventually the impact of the dollar index. So those three are the main important indicators to watch to be able to try to look at how it will affect the Philippine economy.
Okay, on that note, thank you very much, Jonathan, for joining us this morning and sharing your insights.
You're welcome. Thank you for having me.
And that's all for today. I'm Robert Tan. Every day we'll help you make sense of the financial choices and economic forces that shape everyday life. Thank you for watching. Keep it here on the Bilyonaryo News Channel, and always follow the money.